Hello guys, we are back in black, ready to attack. MagicFX is on YouTube again, so like and subscribe if you enjoy my content because it will be coming to you regularly now. So today's video is going to be about the 2.5% challenge that I've started in the Academy, and you guys can join along with that as well. Now, what is the 2.5% challenge? Well, all you've got to do is make 2.5% a week, and then you stop trading for that week, don't take any more trades until the next week. So it's hitting that small target consistently, weekly, and getting you off the charts, getting your psychology in gear, and getting your strategy so you're only targeting those high probability areas, okay? Because you'll have seen in trading videos, in my videos on Instagram, these big blockbuster trades of 100R, 200R, whatever, and they're great. They're fantastic. They get views, they make you look like a superhero, and they get you lots of money. But the truth is, you don't need them. They're unnecessary in trading. Really consistent, smaller wins are a lot more achievable. And this kind of challenge is just to show you, you make 2.5% a week, 4 weeks in a row, that's 10%. That's you past any funding challenge that I know of. And, you consistently make that after you've passed a funding challenge. Say you've got a 100k account, that's 10 grand a month. So yeah, the key to consistency is not aiming for these big wow trades. That's ego. That's overreaching, and it, like I say, it's unnecessary. So what we're going to do now is go through a trade recap on Euro USD, and it's going to show you the power of this challenge with having smaller targets, of just waiting for those higher probability areas, because in your mind you only want that little amount of percent per week, so you can afford to wait. You don't need to be in every move. And also the power of how you can just be done early on a Monday morning. You can get your profit, 2.5% hit, and see you later. Do whatever you want for the rest of the week. So yeah, I'm going to start on a higher time frame. This one is the daily. So without going into too much detail, we had this daily breaker structure here, and this rather long leg of price. And then price came down, created a minor high here, bit of minor structure, broke down, and then broke that minor, and is heading up towards some sort of premium. Now, if we extended our leg, because this is minor, we can extend it to the major, we can see that we did tap into a daily zone that sits just within the premium of that extended major leg, okay? Obviously, I go into structure a little bit more detail in the Academy, but yeah, just going over it quickly here. So from that, in that area, that supply zone, we got a daily change of character. Right here, you can see price made a high, substructural high, created a low, broke that high, and then broke the low created. So we have a daily chalk or change of character. So okay, great. Then what did price do? Well, price came back up, tapped into the extreme of this daily, what caused this daily chalk, and has had some kind of reaction to that. So what could we expect? Well, we might expect price to start coming down to this discount area of that bullish minor leg before continuing up somewhere into one of these premium zones. So with that in mind, it's valid to look for shorts. So we go down a little bit to the 4-hour time frame and clean this up a little bit. What we can see is that, okay, this is that daily change of character on the 4-hour. It's actually a 4-hour breaker structure. And you can see that this is actually just one leg because none of these candles closed above the one to their left, which is one, if you look at my first ever video on YouTube, go back to that, on mapping structure. This is my basic rule for swing structure. is that a candle has to close above the one to its left. Otherwise, it's it's just counts as one leg. It's substructure, sure, but it's not swing structure. So yeah, we've got one leg down here, and then price comes back up into that premium. Doesn't tap a clear zone unless you look at this one bullish candle up here, which is potentially a valid supply zone that price tapped into, and then had some kind of reaction to up here. So then we'll go to the 15-minute. So it's going down time frames, piecing things together, and seeing what's going on. We can see that when price taps into this 4-hour supply zone, we actually got a 15-minute break structure in there, and this is Friday's price action. Price then, we got the break structure. Price came back, tapped into this extreme supply zone, and made its way down like this. Okay. So we had various 15-minute breaks of structure. Now you can see if you follow this price down, you can see that we had this first break structure here, a failure to mitigate this premium before price continued down again. And when you get that failure to mitigate, you can expect at some point price will come back and mitigate that. Look at my video on major and minor structure, or structure part 2, for more info on that. So price comes up, taps in, and what do we get? We get a 15-minute change of character once price taps into a valid supply zone up here, which is this sort of wickiness here. Okay, it's also a flip zone up there. So price taps in and pushes down. We get a change of character when price breaks this low on the 15-minute. Okay, so it's like, right, okay, after we got that change of character, what happened? Well, price pushed down and then came back up and failed to mitigate that 50-minute zone before pushing down again, failed to break any low, came back up, did tap into that 50-minute zone, and then pushed down. Okay, so we've potentially mitigated this 15-minute zone here that's in the premium of this chock leg, and price tried to push down and failed. So we could consider this 15-minute zone mitigated, but again, we're going to go down to another time frame. So we go down to another time frame, and we see that, okay, price tapped into this 15-minute zone. What did it mitigate on the 1 minute? And we see it just mitigated nothing, just this imbalance. And I don't use imbalance as a thing. I know some people do, but for me, not a thing. I like to see actual supply zones tapped into. Okay, so because this hasn't tapped into a valid 1 minute zone, we could say that this overall 15-minute has not been fully mitigated. So now when we go to current price and see that price has tapped further into this 50-minute, can we now see that price has tapped into something more valid within this 15-minute? And we can see we've tapped into this extreme 1 minute zone here, right? Okay. So now price is in here. What happens next? Well, do we get a 1 minute chock? Yes, we do. There's a 1 minute change of character as price taps into this 1 minute zone. Okay. So once you have that 1 minute change of character, what you can then do is look for shorts, because you've got everything you need. We've lined things up from the daily down to the 15-minute, down to the 1 minute, because we've mitigated a zone. Okay, so now what? Basically, now we wait and see what price gives us. Okay, so this is, technically before my session, but I'm up way before my session starts anyway. And if I'm at the charts and I see a trade set up like this, I'm going to be interested in taking it. So moving on we see that basically at this point what we're looking for is for price to tap into a valid zone within this leg that changed character, preferably in the premium up here. So we carry on, we wait for price pushes up and taps up into something up here. So at this point we can then go to the 5 second and see if price actually gives us anything when we get up here. Okay, so looking at this, is there really anything here? For me, we've kind of got a flip and a chock with some, you know, multiple equal highs up here, so I'm currently not quite ready to get involved yet. We then, I'd call that a sweep of these highs, okay, and a potential low to be broken down here. So let's see what price does. Okay, continues to make some strange, like a barcode. All right, so okay, and then a sweep of that, interesting. And then we tapped into this kind of extreme wick here over there. Okay, so now we've got another potential low to be broken here. All right, okay, so now what you've got is actually quite a, this is, you know, you get gaps on the seconds, but this is technically just a big break, a breaker structure on the 5 seconds. So, you know, we've technically, what we've had here is a flip and a boss. Okay, the only thing I don't particularly like too much about this is the equal highs here, but that you do sometimes get that on the seconds when you get a flip. So price comes down, reacts to this demand zone, comes back up, fails to break this high, and then breaks down. So that is technically a flip on the 5 seconds, and it's, if we look on the 1 minute, it's in this very valid flip extreme wick zone. So okay, if price comes back here, I would be interested in getting involved short, like this. So a 1 pip stop loss looks huge right here, but we can, it means we can cover a lot and hopefully get involved. Okay, so price tags us in there. Now looking at targets, okay, you know, what would a sensible target for this be? Well, because I risk 0.5% per trade, each R is worth 0.5%, and if I want to make 2.5%, I'll just target 5R, and then I'll think, right, okay, there's commissions involved as well, maybe I'll add a little bit more, so maybe a 5.5 just to cover the commissions. So if we get that, that is challenge done. And yeah, price easily smashed that target right there. Now, of course, you know, if you were looking for a logical target, you might target, you know, the lows down here, potentially. But also, seeing as price has been quite rangy in this, it would it'd be quite an assumption to assume that price would now break this low, because there's also this extreme area up here. So when we're looking at zones, we're kind of just looking at reaction zones. So again, a plus for smaller targets is the fact that you don't require price to do anything extreme, because it's quite simple with us, with our strategy, to be able to identify zones that are going to have reactions, and if a reaction is all you need to get, you know, a 2.5%, then you can pretty much most of the time guarantee, if you wait for those high probability areas, and those high probability setups, you're going to get that reaction that you're looking for. So yeah, that's pretty much the trade right there, and that would be you done for the week on a Monday morning at 6:45. So yeah, I hope you enjoyed the video. I hope you enjoyed MagicFX being back. There will be more content coming at you weekly. So again, don't forget to like and subscribe. Check out MagicFX Academy if you want to learn more and how to actually do this stuff that I'm showing you. But yeah, see you again, guys.